You are listening to CEO Perspectives, a podcast by the Conference Board.
Welcome to this episode of CEO Perspectives, a signature series by the Conference Board. CEO Perspectives are conversations that take an objective, nonpartisan look at a range of timely topics that matter most to business leaders. To help make sense of these topics and how they'll unfold, we'll sit down with thought leaders and do what we do best at the Conference Board, provide trusted insights for what's ahead. I'm Steve Odland, the CEO of the Conference Board and the host of this podcast series. And in today's conversation, we will discuss China's global infrastructure development strategy, the so-called Belt and Road Initiative. How much money has been spent so far? What are the concerns in the West? And what are China's revamped efforts labeled Belt and Road 2.0? Joining me today is Alfredo Montufar-Helu, the head of our China Center for Economics and Business at the Conference Board and headquartered in Beijing. Alfredo, welcome to the show.
Thank you, Steve. Glad to be here.
So, Alfredo, you've been working in and around Beijing for a very long time. You're a renowned China expert. So you've been there right from the start. Just describe, what is generally China's Belt and Road Initiative? When did it begin, and what were they trying to accomplish?
Right. Thank you, Steve. So what we now know as Belt and Road Initiative, or BRI, actually started as two initiatives which President Xi Jinping proposed in 2013 during his state visits to Kazakhstan in September and Indonesia in October. So the first of these initiatives is the so-called Silk Road Economic Belt. So that is the belt in Belt and Road. And that is basically a rethinking of the original and historic Silk Road that went from China and traversed Eurasia. The second initiative is the ocean-based 21st century maritime Silk Road. So that is the road in Belt and Road. And this one starts in the coast of southern China and crosses the seas to reach Italy, touching several ports along the way. Now, since it was first announced, BRI has expanded to include now a green Belt and Road, a digital Silk Road, and a polar Silk Road that is supposed to cross the North Pole. According to information from the Chinese government, its membership has grown to cover more than 140 countries. So just to say that the initiative now, it's massive. It wasn't intended to be as big as it's now. So what about its objectives? I mean, a pragmatic way of looking at this initiative, and I say pragmatic because the government obviously talks about the initiative is supposed to achieve policy coordination. It's supposed to achieve unimpeded trade, financial integration, people-to-people exchanges. But in reality, BRI is about improving and expanding infrastructure connectivity among and within countries along the Belt and Road. And this is supposed to achieve several benefits. But if we take a look at the initiative, I think there are three most important benefits. So the first benefit is to the Chinese economy. We can see this in, I believe, three main ways. First is because they provide opportunities to Chinese infrastructure companies, state-owned engineering, procurement, and construction firms. Second is because when you develop an infrastructure project, you generate demand for raw materials, construction materials, and machinery. And a lot of this is supplied by China. So this helps support industrial activity, it boosts exports, and also generates employment. And this also, of course, alleviates some of the domestic excess capacity that China has in sectors such as construction and steel. And a third way is because if you think about the medium to the long term, it helps strengthen China's commercial presence in developing markets and boosts international demand for Chinese goods. Now, the second benefit of the initiative is to the global economy, because BRI projects do contribute to addressing the infrastructure investment gap in developing economies, and these can unlock development bottlenecks, so boost cross-border trade and investment and foster local economic growth. But this is a benefit that is provided by all overseas infrastructure companies, including those advanced by Korea, those advanced by Japan, and of course by all the European firms. Now, the third benefit is to the Chinese government. because the positive economic impact of infrastructure development in BRI countries, coupled with the fact that China does not impose strict prerequisites to financing as Western countries do, this means that the Chinese government is better able to gain goodwill from these countries' governments. And this has helped strengthen China's international influence and power within international organizations, which in turn has helped Chinese authorities to promote their view of global governance.
Yeah, and I think this last part is really proving to be, the most important part of it. It sounded like a humanitarian effort when it first started, because they were providing funding to developing nations, poorer nations, to develop this infrastructure, connect with China for trade. It all sounded great, but there are strings attached to all of this, aren't there?
Well, I mean, there are definitely different views about the initiative, right? Some regard it as the most important international development program of the 21st century. Some others regard it as China Marshall Plan. But you see, I don't think the intention was for BRI to be regarded as a humanitarian effort. I mean, it was since the inception focused on international infrastructure development, so not really focused on alleviating poverty, income disparity, or discrimination. This was so. Of course, if you develop infrastructure, you generate economic spillovers that ultimately help alleviate poverty, but that is a byproduct. It's not the end goal. For example, if you talk about the World Bank, or if you talk about all the multilateral development banks, their goal is alleviating poverty. Now, on the strings attached, there is a concern that China is leveraging BRI to pursue so-called debt trap diplomacy, right? So this mainly means luring developing economies into agreeing to unsustainable loans to finance projects that will ultimately lead to financial difficulties, and in turn allow China to seize the asset for geopolitical and even military gains. Now, I think that it would certainly be naive to think that the Chinese government does not have any geopolitical objectives in promoting the initiative. But from my experience, because I used to work on helping Chinese companies assess infrastructure project opportunities in Belt and Road markets, I do believe that economic, trade, and investment goals are the primary drivers. And specifically regarding the debt trap criticism, I mean, it is important to know that many of the debt issues of some countries are not really triggered by BRI projects or by any infrastructure project for that matter. They are mostly related to the financial and fiscal health of these countries, which their authorities sometimes ignore in the pursuit of short-term political and economic gains. They rather have a white elephant project than a sustainable project. And of course, infrastructure companies from China are happy to oblige, because after all, they will get paid.
Yeah. So some of the money that China has contributed have been grants, just donations, if you will. Some of the rest of it has been in the form of loans. But talk about how much money has been spent so far, and where and on what, and how are the returns so far for China?
Well, I mean, there are many estimates about how much investment has been deployed in either Belt and Road projects or in financing these projects, but there is no official number, and they vary very widely. So some estimates say about $930 billion. Some other estimates say that over $2 trillion have been invested there. So we don't really know about how much money is being invested in these projects. Now, in terms of the return on investment, hard to say. I would say that the return on investment is more about geopolitical and political gains rather than an economic gain. More now than before, because in fact, many of these projects are encountering financial troubles. Given the slowdown of the global economy and how heavy has been the hit of the pandemic on fiscal capacity of these countries, many of them are no longer able to pay the debt that they owe to China. So if we're thinking about an ROI for China, well, it's definitely not economic. It's more political.
Yeah, and this is why a lot of people say that the end goals were geopolitical and not economic, your point of view is it's the other way around in priority, but it's because the Chinese government knew that there were going to be lower returns, and so therefore what they were really trying to do is get their claws into these other countries. You don't know unless you're sitting inside of the halls of the of the party, but hence some of the conclusions. But so many of these loans, as you've said, have gone unpaid. So how is China dealing with that? What are they just forgiving the loans? Are they are they taking over the assets? There's a range of activities, right?
Yes. And so the answer to that is also why I believe that it's more an economic priority in terms of the Belt and Road. Chinese, in terms of the financing of these projects, are very clear. They want to be paid. It's like we want to be paid. And sometimes if you look at the example of countries such as Venezuela, okay, we get paid in oil. But at some point, we no longer want oil. We really want to get paid. Otherwise, we don't give you more loans. And so what China has been doing right now is actually reducing the financial commitment to developing nations. If you look at the data, there has been a significant reduction over the past year of China's infrastructure lending, but significant to Africa and to Latin America. So they are reducing financial commitments. Second action they're doing is they're reevaluating their lending practices, because China now has a very big problem with debt and with financial risks. And you can see that in how their domestic property market is doing. It's just on a constant downturn. So risking more of your financial capacity in overseas projects and not getting paid for your investment, it's something that China cannot afford.
Yeah. So how much of that ratcheting back of investment is driven by the fact that the Chinese economy has slowed dramatically and they're still dealing with COVID and their own investment needs, and how much is driven by the performance of their investments outside of China? I mean, what's the balance there? Is it half and half, or is it mostly because of the internal domestic issues?
I think that the internal domestic issues, I wouldn't be able to put a percentage, but I would say that if it would be more than half. If we say something is more than half, domestic considerations in terms of how much they lend overseas. And just the latest data that we have is that China has waived 23 interest-free loans 2021 for 17 African countries. And so, and they have also restructured around 15 billion of US dollars of debt to Africa over the past 2 decades. But that's a fraction of the 160 billion US dollar in loans that China has provided to Africa. So yes, developing countries are heavily indebted to China, and China is renegotiating some debt, but not all of it. So they still owe it.
Yeah. Well, and again, some people say that they want to be owed because they want some modicum of control and influence in those nations. And a lot of these investments in Africa have been for resources, natural resources like the rare earth minerals and so forth. Talk about that.
Right. So, there's no question about it. These investments overseas are opportunistic in nature and are also very much guided by national strategy goals, right? So, if you think that most of the infrastructure companies, actually all of them, are state-owned, they obviously then follow industrial policy. One of that is, of course, securing the resources, mineral resources that will be needed for China to continue developing and achieving its development goals. So, for example, just looking at the data, I used to look a lot at overseas investment data. So before the last 2 decades, China was investing a lot in coal, in iron ore. So the development needs at that time needed those natural resources because China was urbanizing. Now, China continues investing a lot in overseas mining assets, but the resources have changed. Now it's about cobalt, copper, everything that is needed for new technologies.
Yeah.
So the nature, it has changed, but it's still guided by national goals.
Right. So we've discussed the latest updates to the Belt and Road Initiative and what aspects are worrisome and how they're dealing with unpaid loans. Next, we'll explore why the West is particularly concerned about the newest initiative. We're going to take a short break and we'll be right back.
As you and your company monitor the latest wave of shocks that have battered the U.S. economy, the award-winning forecast team at the Conference Board now predicts a recession by the end of 2022. This recession will further compound the crises that have recently upended original expectations, from a deadly pandemic to a war in Ukraine and the highest inflation in decades. Yet, unprecedented crises also present unforeseen opportunities if you have a trusted, proven navigator by your side. With that in mind, and as the Conference Board has always done, we are providing you with daily, timely, and relevant content that will guide the business community through the economic storm. These trusted insights are being gathered on our website and are available to help your company master the challenges ahead. Visit us at conference-board.org/topics/recession. Then, on November 29th, join us for a live virtual briefing from our economists and other financial experts. It's complimentary to you and your colleagues. Register now on our website to hear the latest on weathering this economic turbulence.
Welcome back to CEO Perspectives. I'm your host, Steve Odland, the CEO of the Conference Board, and I'm joined today by Alfredo Montufar-Helu, the head of our China Economic Center at the Conference Board. Okay, so Alfredo, this latest effort by China is labeled Belt and Road 2.0. So, what we've talked about mostly is, I guess, the first wave, Belt and Road 1.0, although they didn't call it that at the time. So what has changed and why?
So talk about the BRI 2.0 actually started in 2019 at the Second Belt and Road Forum for International Cooperation. Basically, what happened is that when initially proposed, BRI captured the imagination of everyone. And after only 3 years, it just became very clear that it had a lot of challenges, and criticism started accumulating. International perceptions about the initiative started deteriorating, and then you had a lot of high-profile project failures, such as in Sri Lanka and Malaysia, and so the talk about debt trap diplomacy started. So the external environment for China and its Belt and Road projects just became very challenging. And at the same time, the Chinese realized that a lot of their overseas investments in not in infrastructure, but also merger and acquisitions, were being fueled by incredible amounts of debt and constituted a very big financial risk. This was the case, for example, of overseas acquisitions of real estate assets. So there was also the financial risk, there was international perceptions growing negative, and they started actually thinking, and I worked on that, Steve. I mean, I worked on a policy recommendation for the Chinese government on how to improve the quality of their overseas investments. Part of the recommendations were improve your risk management. These companies need to invest in core business assets, not in assets that they just want to put in their profiles, in their websites, but in assets that are profitable. And so this led to a rethinking of how are we lending to BRI projects? What are we asking our companies to do? Which projects are they investing in and developing? Because we don't want to have another Hambantota project in Sri Lanka, right? So BRI 2.0 is about this understanding driving Chinese actions to increase the quality of the Belt and Road projects. The challenge for increasing the quality of Belt and Road projects, or of any infrastructure project, the way I see it is that you have to have projects that are economically viable, technically feasible, and financially sustainable, right? And if you want to have those projects, they will attract international capital. If you don't have those projects, then you need to start using rigorous analysis, technical feasibility assessments. And this is one aspect where Chinese companies have shown to not be as good as their counterparts from developed markets. So that is a problem for BRI 2.0, whether China can actually indeed promote these high quality projects overseas.
Well, so 2.0, it sounds like it was a shift towards, a required payback on their investment, but it also was a sort of a re-upping of, funds. If you thought about it in terms of an investment fund, it was a re-upping of the investment fund, wasn't it? And, and a commitment to, the next phase of investment.
Right. It is still important for Chinese strategy, but perhaps we should be talking about a BRI 3.0 now. I just read the work report that President Xi Jinping delivered at the 20th National Congress of the Communist Party of China. BRI is mentioned only 2 times in a report that is 72 pages. So right then and there, you see that the conditions for the advancement of the initiative, and by that I mean the external conditions, are no longer there. Not only is the perception challenging, the international perception, but the economic conditions of like defining whether you want to invest in a risky market are just on a decline. So these markets are just becoming more risky for Belt and Road projects. So
well, it could be that, but it could also be that they've got enough saturation in those markets that they've achieved some part of their objective. In 72 pages there was a lot in there to deal with, right? I mean, there was the whole military aspect and the build up and the future of the party. So it's not surprising that the Belt and Road didn't take a showcased position,
yeah.
but it could be just the maturation, right?
Well, I mean, and also the fact that Belt and Road is no longer one standalone initiative, is
Right.
part of what President Xi Jinping has called the shared future of humankind, and it's also part of another initiative, which is global security initiative, right? So it's all bundled together into a vision of how the world should govern itself, and definitely Belt and Road it has many positives for global economic development. It hasn't been fulfilling its potential for many reasons. And it also, of course, will allow China to continue accumulating international influence.
Yeah.
For certain.
When Belt and Road first started, and I think you said it was around 2013, I think most Western nations were reasonably positive because a lot of that investment went into Africa, which of course, the West has been trying to help for a long time, and hence some of the humanitarian overtones. But recently, a lot of the commentary by Western nations on the Belt and Road Initiative has been a little more cautious and worrisome. Talk about that shift and what's the West concerned about?
I would say that given what has happening over the past years of the increasing strength of China on every field, but also the geopolitical developments of having Russia invade Ukraine, that is at the core of the concerns of European nations vis-a-vis China, because even though China remained neutral, right, they didn't endorse the invasion, but their silence, sorry for saying this, but because they do not want to condemn Russia, that is seen as a signal that China is supporting Russia, especially when China continues importing energy from Russia, right, and providing some economic relief to the sanctions. So
yeah, it's a hard currency that's flowing back. So it's acquiescence at worst, but it's possibly it's an endorsement that's not that's just not verbal. That's the issue.
Right. So I wouldn't go as far as to call it an endorsement, but certainly I think that the external conditions faced by China right now, if you think about all the measures that Western governments are taking against China, I mean, they don't have any incentive to leave their only ally alone. So it's like, but again, I mean, in terms of what this means for China and the Belt and Road and the concerns about the Belt and Road, I think over the past years, there is this brewing concern that Western democratic nations do not want a different country with a different ideology and a different system becoming dominant in those areas that will define the future of the global world order, right?
Well, there's also, as you said, the geopolitical overtones and the Russia-Ukraine situation. I think you're absolutely correct. Has changed things. And you look back to a lot of these investments in Africa, and they could be militarized. I mean, they've dealt with built harbors that would basically handle the Chinese naval fleet and those kinds of things. So I think people are starting to worry about the geopolitical possibilities here, if not pure threats at this point.
Right. I mean, there is no question about it that these infrastructure projects have resulted in China having a very not, I wouldn't say a super large footprint in developing markets, but definitely larger footprint in these markets than developed nations. And if you are thinking about scenario analysis, okay, yeah, at some point China could use them for military gains. But in reality, I don't think China is prepared to take that step. I don't think they want to take that step. And I mean, if you look at the studies, for example, if you look at what happened when Speaker Pelosi landed in Taiwan and the whole conversation about whether China was militarily ready to take on the US because of this, and they are not. I mean, they are not. So thinking that China would take advantage of these infrastructure assets to expand its military into these countries, I just think that I just don't see that happening.
Well, but people say it is the infrastructure that would make that capable. I mean, they're building airfields, they're building they're building harbors, and in more remote places in the world that extends their power. What is power and influence if not to be used for power and influence?
Well, I would say that economically speaking, it's definitely the case that when you build a long-lasting, for example, railroad project that fits the standards and the technology of your own rolling stock that you manufacture in China, you are already outcompeting everyone else. Now, that is the same for Korean companies and Japanese companies and Spanish companies. So they all do the same. They create monopolies with that.
Yeah.
So, but that's the nature of infrastructure development.
Yeah.
What I think is also concerning for someone sitting in the White House is the fact that China is extremely strong, well, not extremely, but I would say very strong in the development of telecommunications infrastructure in Africa. And that, of course, leads to concerns about the technologies and standards that feed into this infrastructure. Because once a telecom project is delivered, this leads to a second wave of Chinese investment in, say, mobile devices. So if you are concerned about cybersecurity, I could see how these would raise your eyebrows and say, oh, we need to do something there.
Yeah, and there's the alleged backdoors that are being built into the hardware that are being provided, which allow all of that. So I think there are clearly geopolitical concerns, and whether or not that has happened so far is open to some debate. Clearly, it's enabled China to help project their power around the world. So if you were if you were running one of these Western nations, what would you be doing? What should they be doing? What would you be doing in order to sort of neutralize or counter this influence that is being projected around the world?
I mean, I think that the West is already doing something, right? They are coming up with initiatives to finance their own infrastructure development in the world. The most important that has come up so far, and that was this year, June 2022, is the Partnership for Global Infrastructure and Investment, right? Now, this is a 600 billion initiative. So in terms of a scale, there's no way to compete with Belt and Road. So one thing that I would say is that, I mean, if you want to compete against Belt and Road, you really need to up your scale. Now, the second aspect of that initiative is that it's meant to trigger private investment into infrastructure. So that means that it's not this money invested directly into infrastructure. It's meant to pool some private investment, private capital, and then invest it in infrastructure, right? I mean, private capital is only going to be interested in investing in bankable projects. So right there, we have a problem because Chinese capital invests also in less bankable projects. So in terms of the influence that you can gain there, you're really not competing. So it's the scale, it's the standards of where you invest. It's also how you're going to invest. You want to catalyze investment on private companies and not use your own government capital. That's also a concern. But again, I mean, I think one thing that Western governments haven't done very well is that when they try to invest in developing nations, they might be seen by local stakeholders as condescending because they see that as like, okay, you're trying to fix a problem when we do not think there is a problem, right? And so if you want to help these governments become better markets or adopt best practices, adopt or strengthen their institutions, you need to do it with the endorsement of local stakeholders. You really need to acquire a social license to do these things. And I don't think Western governments have been very good at that. And I think that it's not that China has been better. No, it's just that China does not do that. It's they don't pay mind to that. Their investments are like, we invest on a commercial basis, and whether you want to become more democratic or not, or whether you want to push forward this reform or not, we just don't mind. That's your own sovereign issue. We just invest.
Yeah. Alfredo, this has been very enlightening. We really appreciate you sharing your insights related to China's Belt and Road Initiative.
Thank you very much, Steve. It was a pleasure to be invited for today's podcast.
And thanks to all of you for listening in to CEO Perspectives. Every week, I'll be joined by a prominent thought leader to provide insights on the issues of our time. We'll cover the leading topics in economics, public policy, geopolitics, ESG, and more. Please share CEO Perspectives with your colleagues. I know they'll want to listen too. I'm Steve Odland, and this series has been brought to you by the Conference Board.
You've been listening to a podcast from the Conference Board, the indispensable ally that has helped businesses through war, recession, and economic transformation since our founding in 1916. As recent unexpected economic challenges persist, you can find the latest and most trusted insights for what's ahead on our website. Please join us on November 29th for a live global virtual briefing from our award-winning economists and other financial experts. Get the latest thinking in how to best weather the economic turbulence by registering for this free briefing at conference-board.org/topics/recession.